Hello viewers, so welcome to my channel. I'm Hasham. Now I'm going to start the problems on weighted average cost of capital. Previous two videos I have completed the specific cost of capital, that is KP, KD, KE and KR. So in this topic of cost of capital we have two stages. First we have to calculate the specific cost, then we have to calculate the overall cost of capital or weighted average cost of capital. So if you want the perfection on this topic, watch all the videos from beginning till end. And the problems are based on the theory. In examination, you may be asked a theory question or problem from this topic of cost of capital. So my suggestion, be thorough about the concept. Be clear about the concept and then you can do the problem. So if you have not watched, I suggest you go to the playlist of my channel, select the subject Financial Management for BBA. Select the videos of cost of capital. Be perfect and then we can do the problem easily. So before starting the 10th problem, so far 9 problems we have completed. So before starting the 10th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points written on the board, then I'll explain. See the 10th problem. A firm has the following capital structure and to after-tax cost of funds. Capital structure consists of combination of long-term sources of funds. So here sources of funds are debt, preference shares and equity shares. Only 3 types of long-term funds. For each type, amount is given. These are the book values. So debt 10 lakh, preference 5 lakh and equity 20 lakh. And the after-tax cost, these are the specific cost of each type of fund. That is cost of debt, KD is 12% after tax and preference shares 10%, equity shares 15%. Required, compute the weighted average cost of capital, that is WACC. It is also called overall cost of capital or combined cost of capital. Now how to calculate the WACC? Here, see the problem. Calculation of weighted average cost of capital. 4 columns we require. First column, source of funds, which is given in the problem. Then amount. These are the book values. Then after tax cost. These are also given in the problem. The only extra column we need is total cost. Multiply the amount with the cost, with the after tax cost. That is 10 lakh into 12%. You will get 1,20,000. 5 lakh into 10%, 50,000. 20 lakh into 15%, 3 lakh. Take the total of cost, it comes to 4,70,000. And the total of the amount, 35 lakhs. The total funds employed in the business is 35 lakh, on which the cost paid is 4,70,000. What is the average cost? So WACC, weighted average cost of capital, total cost by total amount into 100. So 4,70,000 by 35 lakh into 100, you will get 13.43%. So simple. In examination, you may get this type of problems. So the calculations are very easy, very simple. Formula is total cost by total amount into 100. Next, 11th problem. Problem number 11. A firm has the following capital structure and after tax cost for different sources of funds used. So sources of funds are debt, preference, equity, retained earning. Previous problem, retained earning were not there. Here retained earnings. Compute the WACC, weighted average cost of capital. Amounts are given, proportion is given. Actually in this total 40, 70, 1 crore. The total amount is 1 crore. In 1 crore, 20 lakh is debt. So 20 lakh by 1 crore into 100, you will get 20%. That is the proportion. Similarly, 10 lakh divided by 1 crore into 100, 10%. 30 lakh by 1 crore into 100, 30%. Like that proportion is given. So WACC can be calculated by using proportions or by using amount. Both ways you will get the same answer. So right now we are using amount. So presently also we will use the amount. So by using the amount or by using proportion, we'll get the same WACC. The after tax cost is 4.5% for debt, 9% for preference, 11% for equity and 10% for retained earnings. Exactly similar what we have done just now. Sources of funds, amounts are given. The total amount is 1 crore. Then proportion, actually we don't require. Then after tax cost of capital. Now total cost is not given in the problem. We have opened the column and we are calculating total cost. How to find out total cost? Multiply the amount with the after tax cost. Amount is 20 lakh into 4.5%. You will get 90,000. 10 lakh into 9%, 90,000. 30 lakh, 11%, 3 lakh, 30,000. 40 lakh, 10%, 4 lakh. The total of the cost is 9 lakh 10,000. That means on the total capital employed 1 crore, the company pays the cost of 9 lakh 10,000. So what is the WACC? Total cost by total amount into 100. 9 lakh 10,000 by 1 crore into 100, you will get 9.1%. That's it. So 11th problem completed. Now see the 12th problem. A firm has the following capital structure and after tax cost for different source of funds. Source of funds are debt, preference, equity, retained earning, total. Totals are also given in the problem. Previous problem it is not given, we have calculated. Now you are required to compute the WACC, weighted average cost of capital. Exactly similar to the previous problem. Now here, sources of funds, debt, preference, equity, retained earning. Amounts are given 15 lakh, 12 lakh, 18 lakh, 15 lakh. The total capital is 60 lakh given in the problem. Then proportion. Proportion, out of 60 lakh, 15 lakh rupees are the debt. So 15 lakh by 60 lakh into 100, you will get 25%. 12 lakh by 60 lakh into 100, 20%. So we can calculate WACC either by taking the amounts or by taking the proportions. You will get the same answer. Then after tax cost, 5% for debt, 10% for preference, 12% for equity, 11% for retained earning. Now we need one column, extra column, total cost, which is not given in the problem. We are going to calculate. How? Multiply the amount with after tax cost. That is 15 lakh into 5%, 75,000. 12 lakh into 10%, 1 lakh 20,000. 18 lakh into 12%, 2 lakh 16,000. 15 lakh into 11%, 1 lakh 65,000. Take the total 5 lakh 76,000. On the total capital of 60 lakh, the company pays 5 lakh 76,000 as the cost. The average cost 5 lakh 76,000 divided by 60 lakh into 100, 9.6%. That is the 12th problem completed. Now 13th problem. The following is the capital structure of SPG company: debentures, preference share capital, equity share capital, retained earnings. Amounts are given, market values are given. The new point. So comparatively this problem has some new points. So give more concentration. Book values are given, market values are given. Book value is the balance sheet value and the market value are the value prevailing in the market. Now after tax cost of capital are cost of debt 5%, cost of preference 8%, cost of equity 13%. And retained earnings, what is the cost? Not given. Actually the cost of retained earnings and the cost of share equity capital both may be same. Only under certain circumstances it will differ. When? If the tax rate of the shareholders are given and if the flotation cost, that means the cost incurred on transferring of securities by the shareholders, if it is given, then cost of retained earning and cost of equity capital will be different. In our problem, what is the rate of tax of shareholders? Not given. What is the flotation cost incurred by the shareholders when they purchase or sell the security? Not given. In that case, we assume whatever is the cost of equity will be the cost of retained earnings. The cost of equity is 13%. So we can take cost of retained earning also 13%. That is the assumption. In examination, you should write the note that cost of retained earning will be equal to cost of equity, assuming that there are no flotation costs by the shareholders and tax rate is not given. Calculate the WSCC of the company using book value weights and market value weights. In the previous 2-3 problems, what we have done, we are given only the book values. Balance sheet values are given. But in this problem, balance sheet values are given and market values are given. So we have to calculate separately WSCC using book values and using market values. So here, calculation of WSCC using book value as weights. So first of all, we are taking book value. Source of funds, debentures, preference share capital, equity share capital, retained earning. The book values are given 4 lakh, 1 lakh, 6 lakh, 2 lakh, total capital 13 lakh. And the after tax cost of each type of fund, debenture 5%, preference 8%, equity capital 13%, and retained earning not given in the problem. So in working note, you should write down, it is assumed that cost of retained earning is equal to the cost of equity. So 13%. So multiply 4 lakh into 5%, 20,000 total cost. 1 lakh into 8%, 8,000. 6 lakh 13%, 78,000. 2 lakh 13%, 26,000. The total is 1 lakh 32,000. The 1 lakh 32,000 is the cost on amount of 13 lakh. So WSCC using book value weights. Total cost divided by total book value. 1 lakh 32,000 divided by 13 lakh into 100, 10.15%. So we have calculated WSCC using book value. Now we calculate WSCC using market value as weights. Now same columns we will open. The debentures, preference, equity, retained earning. The market values are given in the problem separately. We will not take the book values. The market values are given 3,80,000 for debenture, preference capital 1,10,000, equity capital is not given market value. Market value equity capital is given 12 lakh, but retained earning market value is not given. Remember, equity, preference and debentures are external securities which are traded in the market. That's why there is a market rate for equity, preference and debentures. But retained earning is not a security which is traded in the market. Retained earning are the funds, internal funds of the business. So rate is not given. So what we assume is the total market value. The total market value of equity is 12 lakh. That 12 lakh we divide into equity and retained earning in the ratio of book value of equity and retained earning. What is the book value of equity? 6 lakh. What is the book value of retained earning? 2 lakh. So the ratio will be 6 lakh is to 2 lakh. Simply 6 is to 2. So we divide the market value of equity of 12 lakh. Here in note I have given. The market value of equity of rupees 12 lakh should be divided between equity and retained earning in the ratio of the book value of equity and retained earning. The book value 6 is to 2. So equity, total value of equity is 12 lakh into 6 by 8. It comes to 9 lakh. Similarly, retained earning 12 lakh into 2 by 8, 3 lakh. So instead of taking 12 lakh of equity, we divide into both the categories, equity and retained earning, 9 lakh and 3 lakh. So here, equity capital 9 lakh, retained earning 3 lakh. If you add up these two, it will be 12 lakh. So don't take 12 lakh in equity and don't take dash in retained earning. We have divided. And the rate, the after tax cost of equity 13%, but retained earning not given. Make the assumption that cost of equity and cost of retained earnings are same due to lack of information regarding flotation cost of the shareholder. And what is the rate of tax applicable to the income on investment by the shareholder, right? Now 3,80,000 into 5%, 19,000. 1,10,000 into 8%, 8,800. 9,13%, 1,17,000. 3,13%, 39,000. Now take the total 1,83,800. This is the total cost on the total amount of 16,90,000. 16,90,000 is the total of the market value, whereas 1,83,800 is the cost paid. So what is the WSCC? 1,83,800 divided by 16,90,000 into 100. It comes to 10.88%. This problem is particularly important. More frequently asked this type of problem, where book value and market values are given and we have calculated WSCC on the basis of book value and on the basis of market value. So in this video, 4 problems I have explained on calculating the WACC. Next video, 2 more problems are there, some new points are there that we'll discuss in the next video. So if you are satisfied, give a like to the video, share my channel, subscribe if you have not yet subscribed, and give the comment from where you are watching this video and to which university you belong. Inshallah, we will continue the next problem in the next video.